Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead that markets are even more skittish, with key activity moving into bond markets at even higher yields. First, American mortgage applications fell back last week, and by their most since late September. Fears about rising interest rates are getting the blame as it sinks in that highish inflation isn't going away. Refinance activity was the hardest hit. Still, it and the purchase application levels remain well above year-ago levels. And there was also official data released overnight, old catch-up data for the US trade balance for both goods and services. That came in at the expected $50 billion deficit for August, exports flat, imports also flat. That was slightly better than August 2024, but almost identical to August 2023. And there'll be no October jobs report for the US. It has been cancelled officially because they couldn't collect some data, but more likely because it would have delivered news the White House didn't want. Meanwhile, reports circulate that the US is not only rolling back tariff taxes on food imports, it's also rolling them back on steel and aluminium, maybe like the food rollback though somewhat selectively. And the latest US Treasury 20-year bond auction raised $17.8 billion at a median yield of 4.65%, up from 4.46% at the prior equivalent auction a month ago. In Japan, September machinery orders rose a better than expected 11.6% from the same month a year earlier, up an impressive 4.2% from August. This result is not twisted by large volatile items for ships or other major infrastructure machinery like electric power plants. That would have pushed the rise even higher. Export orders were particularly notable. And Japan's 10-year government bond yield rose above 1.77% on Wednesday, a 17-year high. A year ago it was at 1.06%. The recent climb comes ahead of a crucial 800 billion yen debt auction, that's $5.1 billion US, that could indicate investor appetite signals. And that is important because the new Takaichi government plans major debt financing stimulus, which is raising fiscal concerns. Meanwhile, China raised $8.6 billion in US dollar and euro bonds. That is a lot for them, but it pales compared to the $234 billion US dollars that was bid. In Malaysia, they're still an export powerhouse, with October exports up 15.7% from a year ago to a record high, imports up 11.2%. Also a record high, resulting in a larger trade balance than expected. In fact, they haven't run a trade deficit in any month since the pandemic. And as expected, the Indonesian central bank left its policy rate unchanged yesterday at 4.75%. In Australia, payroll costs rose pretty much as expected in the September quarter. They're up 3.4% year on year, unchanged from the previous quarter. Public sector wages increased 3.8%, slightly above the 3.7% rise in the second quarter, while private sector wages grew 3.2%. The US Treasury 10-year yield is now at 4.11%, down 3 basis points from this time yesterday. And the price of gold will start today at $4,071 an ounce, and up $10 from this time yesterday. American oil prices have softened 50 cents to be just under $59.50 a barrel, while the international Brent price is now just under $63.50 a barrel. And the Kiwi dollar is now just on 56 US cents, down 60 basis points from yesterday. Against the Aussie, we're down 30 basis points at 86.7 Australian cents. Against the euro, we're down 40 basis points at 48.5 euro cents. That all means our trade-weighted index starts today at just over 60.7 and down 50 basis points from yesterday, and its lowest since July 2009. And we should probably note that the US dollar has now fallen below 4 Chinese renminbi for the first time in 3 years. And the Bitcoin price starts today at $89,524 and down a sharp 4.2% from yesterday, and well lower than year-ago levels. In fact, it is falling as we release this podcast. Volatility over the past 24 hours has been moderate, at just on plus or minus 2.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.